Well, thank you very much. Good morning, ladies and gentlemen. It has been a very, very interesting morning for all of us who are over here and those who are watching the live telecast. We heard so much from the Hong Kong regulators and policymakers, and also Duncan, who made a very good speech about where Hong Kong is going. And I think the response from the market, I can see that it is extremely positive. And we are very glad today to have three leaders in the ecosystem builder, and they need no introduction. I think you know who they are. And I think what we want to do this morning is to go deeper into what we have heard about this morning and to discuss some of the issues so that we have a better understanding of where the entire ecosystem is going. So maybe I can start with Duncan today. Congratulations. I think you have built the ecosystem together with your team and the regulators to today. And we have seen a lot of progress. And this morning, we've certainly seen a lot of very interesting announcements from the new regulation, the drafting of new laws, and that's about to come, and working on various areas, including RWA, stable coins, and we see licenses are being issued for stable coins. We see liquidity issues are being addressed in the very near future. And you have made a very interesting sharing earlier on. Could you sort of give us an idea, since Hong Kong has made so many important progress in the digital asset regulation, from your perspective, what should the next policy priority? There are so many policies and regulation that we're looking at. If Hong Kong wants to be not just licensing jurisdiction, but a genuine hub for issuance, settlement, and real adoption in a stay fast, not in a rush, as we heard this morning.
I think we've talked enough about legislations and regulations, so the whole morning we were focusing on that. But you know, as a legislator, I represent the technology and innovation sector. So I always want to have a balance between the regulator and the innovators. So what we do before is sort of, you know, we understand the demand for the industry, the digital asset industry, that we need a regulatory regime to actually provide a safe trading investment ground in Hong Kong. And we understand this is a trend globally, that we have to, you know, keep pace with what's happening globally. So that's the way inside. And we will have a few legislation coming forward. So this is the legislation progress. But, you know, what I want to see more is on the innovation side, because, you know, over the last 10 years and then plus years in the crypto market, you know, there has been many innovation in the product side. And now we're talking about tokenizing different traditional financial products, securities, bonds, you know, commodities, and this, et cetera. Of course, we have to leverage the technology itself, but I believe there will always be innovations. So if you ask me, what I want to see is how do we have ways to lead in more new products, new business model being created in Hong Kong, and you know, how the regulators will deal with these new products that will be created. That's why I mentioned about the exemptions, you know, in some of the bills the US that has laid down. So things like that, these are very important, that we have room for innovations while we are providing a complete regulatory regime in the systems. I think once you have innovations and new products, all these will follow. You mentioned about the infrastructure, the liquidity, you know, the contractual relationship between the banks and the financial institutes and the users and the buyers, investors, etc. These are all, you know, I think consequences. If you have the cost, which is good product, good investment product, safe, people want to invest in to keep safe, and you know, all these will follow. So what I want to see is, you know, how we lead in innovations into the next few years into the development of the digital asset markets in Hong Kong.
Thank you very much, Duncan. I think you have given us a very clear direction. It has to be market driven, market demand driven innovation in the sense that we can't just have any ideas or white paper and then you hope that it will take off. And once you have the right product, whether it's insurance, whether it's a business model that works, then I think the rest will set in place. And you have done a lot of work to set the groundwork, the legislation, they are all there. Now it's waiting for the ecosystem to respond, for the entrepreneurs to respond. And that's where I come to Eric. Eric, at Cyberport, I see a lot of innovation. I've seen how Cyberport has grown to today with a lot of significant changes. And what Duncan is talking about is about use cases. So have you seen any of those startups? Have you seen any of the sandboxes or any of the projects has gone to the stage where it's ready for commercialization and mass adoption?
Okay, thanks, David, and thanks for having me today. Well, last year, Cyberport actually launched a pilot program. It's a what we call a blockchain and digital asset subsidy pilot subsidy program, in order to drive more impactful projects like RWA tokenization and probably stablecoin payments and also decentralized identity, that type of things, right? So 9 projects actually joined the program, and half of them are involved in RWA tokenizations and related projects. So I believe that would be a real potential for many of them to get commercialized. And the idea of launching that program is really to drive not just POC, proof of concept, but beyond POC to commercialization. That's the whole objective of the program. And we're actually seeing many of those successfully implemented, and they must have addressed some industry pain points, right? For instance, one of the projects was related to automation of fund administration in order to lower costs and reduce reconciliation errors, right? That type of things. And for those that tokenize traditional financial instruments, it would be to create more commercial angle. If tokenization could create like additional utility for the financial instrument, for instance, lending or borrowing, or to engage further users, that type of things. So we want to see actually more real life use case to be tested out and then to be commercialized through this kind of a push. And we have already gathered over 300 Web3 companies in our community, and we have been encouraging many of them to participate in this kind of things, so that there is actually more cross collaborations. And we see a lot of them actually working with asset managers or large corporates in exploring various different innovations to streamline, automate, and improve the industry processes.
Indeed, I see a lot of good projects coming out from Cyberport because I've been watching it very closely. So congratulations on
Thank you.
Some of these projects. Yuki-san, welcome to Hong Kong from Japan. I know you just arrived.
Thank you.
We have heard a lot about Hong Kong today, a lot of good news. I know there are a lot of development in Japan as well. From your perspective, could you give us a little bit more about what's happening in Japan in the area of Web3?
Now, recently, there's a big change in Japanese legislations. At this moment, stablecoin and the crypto is under financial service law. But 10 days ago, April 10th, Japanese FSA submits a new bill to the Diet. That means, crypto is going to change the Financial Instrument and Exchange Act. That is a very big change, because if it's admitted as under the Financial Act, that means crypto is admitted by the government and also politicians to be. They admitted every nation can invest the crypto by himself. That is very big approved. That means also At this moment, only BASP is treating crypto, but from now, some exchange also will deal with crypto. The big change, but hurdle is very high. So some of Japanese BASP will, give up to do the business, I think. On the on the same side, stable coins also, still in financial service law. That means everybody can do that. It's different.
So there are a lot of development and the ground is set. Now just waiting for the ecosystem to respond.
Yeah. So if many Chinese companies try to invade the Japanese, market, but if they try to into Japanese market, they have to get a big license of that is Japanese Financial Instrument and Exchange Act.
Yeah. Thank you very much, Yuki-san. Let's come back to Duncan. Let's go deeper from the discussion this morning, especially for RWA and tokenization. Where do you see the most important bottlenecks today? Whether it's legal structure, distribution, settlement, secondary liquidity, tax accounting treatment, or something else? Or you just mentioned this morning about responsible innovation in the quantum space, talent, and are there bottlenecks now that we need to look at and as ecosystem builder that we need to spend more efforts on?
Yeah, I think there are always bottlenecks in many different areas. And I wouldn't say legislation because, we always follow behind the markets. And I think from the market side, adoption from traditional financial institutes is also slow. Of course, you see that we have two stablecoin issue to banks in Hong Kong. That's one way. But, in terms of other side of the build-up, in terms of infrastructures, I think from the financial institutions, traditional financial institutions in Hong Kong are still moving quite slow. We see some, let's say, digital banks, they were the more adventurous and more pioneer in terms of adoptions of the products and building up the infrastructures and trying out different products to their users and clients. So that's also one thing we have to explore. But I think everything is tied together. As I mentioned, coming with a new product that will be widely accepted is definitely something we should try on. I personally think, let's say, tokenized gold and things like that are things that could be rightly circulated and provide a kind of transparency, safety, and also it could be useful for investors and holders into that kind of tokenized products. So to try it out on new tokenized product, I think is also another things we have to work on further.
Yeah, I tend to agree with you, Duncan, that everything is actually set on the stage, right? And you can see that US, they have the Clarity Act, they have Genius Act. You can see international organizations like Visa, MasterCard buying into payment rails of stable coins. You can see banks in the US. You can see a lot of banks around the world all beginning to power on to RWA and tokenization. And the regulations are not an issue as compared to 10 years ago when we have all this Web3 conference by Wan Xiang in Shanghai and then in Hong Kong. We have progressed a lot. And then it's just a matter of time now for institution. And clearly America is taking the lead now, which we heard from Professor earlier on about how the OCC has allowed the banks to do stable coins and solving the problem of on-ramp and off-ramp for a lot of founders. So coming back to Cyberport, we now look at the other side because what Duncan talking about are the blue chip Web2 companies that are venturing into Web3. But if you are Web3 founders, what is it that you need to do to get the banking support, regulatory clarity, enterprise demand, compliance, talent, distribution, and deeper liquidity, because you are from the startup perspective?
So I guess technology companies of different nature actually may have different needs, right? For instance, infrastructure players, they are there for building up their ecosystems. So they will probably see, talents related to, technical stuff and also business development will be key, for them. But for businesses that are heavily regulated, such as virtual asset trading platforms or any other RWA-related businesses, I guess regulatory clarity is very important. As our previous speakers already said so, and the respective regulatory costs would be also an important factor they would see, because even those who do not get the license themselves, they will need to pay, the partners, to support the businesses, right? So if there's a high regulatory cost involved in that, that would probably, hurt, the businesses and even make the businesses not viable, in a sense. So, as a flagship, digital technology hub of Hong Kong, Cyberport, we have a lot of companies coming from different parts of the world. We already have, as I said, over 300 companies coming from 19 countries and regions, right? And they are here, to potentially, because they see the clarity, the regulatory clarity in Hong Kong, and they believe that they could build a business here. And then we try our best, to build a comprehensive ecosystem and a support system, ranging from organizing a lot of demo days, business matching, investor matching. We even have our own VC funds that we invest into some of those companies. We want to make sure they fully understand the regulatory requirement and compliance requirement. So we work very closely with our policymakers on that and become also the voice from the market. And by fostering all these multidimensional collaborations, we hope that we will like to, build a good tech clusters. And I guess at the end of the day, they are here for businesses. And we have to make sure that they can build a profitable and sustainable businesses, using Hong Kong as a platform.
So thank you very much, Eric. I think you raised a very important point for any ecosystem builder, especially conversation with regulators in Asia. Because if you look at America, SEC Chairman Paul Atkins and Hester Peirce and so on, in the safe harbor and so on, they are now trying to reduce. They have a lot of clarity and they reduce the cost of compliance. Because it will be an irony to see compliant financial institutions, the profit is not that high as compared to unlicensed institution, which is very, very profitable. I think regulators don't want to see that either, because when that happens, you have a lot of good institutions being driven to the gray area. I think as conversation with regulator, I think there's something important. How do we have compliance costs being lowered? Is there going to be some subsidy? We want to have a stay fast progress. But compliance cost is a major issue for startups. How do we have a different level of compliance requirement? Is there a subsidy that we can help them? I think maybe as an ecosystem builder, we need to think about how to have a conversation with the Asia regulators as a whole. It's not possible to have a harmonization of regulation, but I think this is an important issue to promote responsible innovation. We do not want to drive all these young people going into the gray area and to avoid being regulated. We want them to be part of the system. So I think this is a very important issue that we need to think about how to have a conversation with the regulators. Yeah. So going to Japan, this morning I read from my WeChat that Singapore is competing in Hong Kong, Hong Kong is competing with Singapore. To me, there's no competition. We are all in the ecosystem, we are all building it together with Dubai, with America, with Europe, with the MiCA, with the Clarity Act, and so we are all in one ecosystem. How do you see the Japan approach to this? Because you are also one of the important ecosystem builder. How do you see Japan in this approach? Is this a competition approach, or it is a working together, part of the nodes and is the blockchain philosophy that we have?
Yeah, a few years ago, there's a lot of Japanese startup Web3 companies. But because of very strict rule in Japan, more than 200 companies escaped from Japan to Singapore, unfortunately. And recently, Singapore rule is also strict, and they moved to Dubai or some places. So we are discussing about this is trouble because we are talking about some congressperson, and they understand that situations. So they try to change the rule. And they asked the FSA, why don't you change a little bit? So first of all, we changed the tax rules for institutions 2 years ago. Now we are discussing the individual tax rule for crypto. That will be also decided this year. So maybe first January for 28th, new tax rule is in Japan. So maybe such kind of new startup guys are recently coming back to Japan little by little. That's a tendency.
Yeah. So I think this is interesting in that it's difficult to have harmonization of regulation because we have a lot of closed door meeting. Most regulators would not like to have harmonization of regulation, and they differentiate themselves by tax incentive and so on, which I think is a very interesting approach because different business model will have certain advantages in different jurisdictions, but we are all one ecosystem. So I think that is something that we should all work on as one big family, even though there's no harmonization of regulation, but we should attract different type of businesses to our own shore to further the ecosystem.
Today I'm on behalf of JVCA and JCBA. JVCA is a self-regulatory organization approved by FSA. On the other hand, JCBA is more than 160 companies gathering, law firms, accounting firms, and BAPs and the startup. JCBA has a MOU agreement with all over the world, Europe, US, and many Asia's associations. So we are discussing, exchanging our opinions to make some kind of conclusions. That's we are doing at this moment.
Yeah, that's very good. Thank you very much, Yuki-san. Back to you, Duncan. I know, you mentioned that when there is a good fundamental, then liquidity will actually come into the picture because that reflects the fundamental value and so on. But in reality, sometimes we find that, I've been in the market for a long time, from equity to property market to crypto. And one thing that always puzzles me is that it's a chicken and egg problem, right? If we don't have enough liquidity, there's no participants. But if there's too much liquidity, there's a lot of speculation. We need to have a balance. But somehow or other, we need to have some low level of liquidity for RWA, for stable coins, which I think this morning we heard from the regulators that there are plans to do that. What else can we do, Duncan, to ensure that when we launch our RWA, even is a very good fundamental, that we have a minimum liquidity to reflect at least the fundamental value?
Yeah, I think this is actually, a lot of people have interest in the RWA market and tokenize everything. But, the big question is whether there is liquidity, whether there's trading, whether the price is fairly reflected, in the way it's traded. So in the market, we see in the crypto market that, market making or liquidity providing is actually one of the components. A lot of providers in the market provide these services. And I think this is something that we have to discuss in Hong Kong, because if you look at the stock market in Hong Kong, we don't actually allow, market making. And that, in different markets in the world, they will have different guidelines and regulations on market making. But in Hong Kong, we also don't have market makers in the stock markets. So that's something I think we have to look into. And I understand, as the Eric from SFC just mentioned earlier, we will have likely at least two bills that we have to discuss in Hong Kong. One is the virtual asset dealing, one is the virtual asset custody. So I think within the virtual asset dealing, one of the things that we will touch on is liquidity providing. So whether that will fall into the regime that you have to be licensed to provide liquidity in the market. So I think that is yet to be discussed. I think that will come later this year, and then we will table that at Legislative Council, and we'll see whether that will be included in the VA dealing or some other of the licensing regime that we will go through later.
Yeah. So indeed, we are seeing a lot of market makers from traditional moving into crypto. I don't see any specific crypto market making license anywhere in the world at this moment. It'll be interesting to see if Hong Kong has something of that form, and then we'll attract a lot of participants. And then come to cyberports, right? So for stablecoins and tokenized money, compliant custody, trusted identity, data, Oracle infrastructure, or secondary, how do you advise, any startup to look out for market access as also as liquidity? Following up from Duncan, my questions to Duncan.
Well, I guess trusted identity is the foundation, right? For any RWA or payment projects that want to scale, you need to know who is participating, right? Under what permission or under what compliance rules. And I guess institutional tokenization models increasingly rely on permission-based KYCL, AML, and compliance by design rather than purely anonymous participation these days, and which is why identity sits at the base of the stack. And the second, I guess the biggest issue is really the second market access, because liquidity ultimately determines whether a tokenized asset, could become a real market product. And a product may have, strong structuring, sound compliance and reliable technology, but without an active, secondary market investor, will hesitate to participate, because of entry, exit, and all this price discovery, remain limited. And in practice, issuance is only the first step. I guess whether people are have real adoptions comes when the asset could be traded efficiently and distributed more broadly and supported by a market structure that gives investors confidence to commit capital, right, investment. And I guess it's also important to realize that the role of RWA solution providers, we could actually execute across the whole RWA lifecycle, and in practice, success actually comes from having an ecosystem, that can connect assets, origination, structuring, tokenization, compliance, custody, distribution, and ongoing servicing in the whole workable model. And this is what makes these firms so important, that they turn all these RWA into investable products, and by coordinating and activating all the enabling layers for that reason.
Thank you very much, Eric, for sharing your view about ensuring there is you have to take care of the compliance costs, market demand, liquidity, organizing with the ecosystem to ensure your project takes off. Yuki-san, what about in Japan? How do they view market making? Are there any special rules or incentives for the market making industry to build up?
Yeah, it's very difficult questions. As far as market making is concerned, the BASP now, of course, BASP introduced the market making system, but from the security point of view, sometimes it's illegal from the Japanese law. So now we are discussing about the FSA. What is the middle? It's not so strict, not so narrow. So we are just discussing with the FSA. But it takes maybe 3-4 months from now. So I can't say about anything about this.
Yeah, I think we need to think about what is responsible market making. I think that's key, because it's part of the infrastructure of a new financial products that the market needs. I want to stretch this even further, right? I was a hedge fund manager for 20 over years. When we first started, one of the reasons why we started, and hedge fund was like a bad word when I first started, because it's short market and so on, but really that comes from the university endowment fund. It's actually very quant-based. It's very risk management based. And we as hedge fund managers on the market neutral activities, we generated a lot of volume for the underlying instrument to create the liquidity. I want to stretch this further. Now that Canada, America is talking about prediction market, poly market, talking about Kalsha and so on. These are all banned in Singapore. You can't even go onto the website. But if you take the view of a hedge fund role in a market as prediction market, take away the gambling, take away the insider trading advantage trades, like Canada, focusing purely on generating the liquidity and hedging for the underlying RWA and stable coins. I want to ask three of you, what are your views? I know this is a very difficult question, but I want to push the envelope further. What are your views, Duncan?
It's interesting you raise a point about responsible market making. I think in terms of market participant, there's nothing like, it's difficult to say responsible something, right? It's only from participant, it's only what is allowed and what is not allowed, right? So people will always push to the limit, what is allowed to do. And, because every company participants, they have to think about profitability in terms of, participating in the market. So they could be responsible for sustainability, ESR, things like that. But in terms of the product, I think it's always about what is allowed and not allowed. So this is important for the legislation and regulations to come in. So I think, market making, as Yuki-san just mentioned, something will be debated, in many different markets. And, we got to see how it develops. But you go to the prediction market, right? So you're talking about prediction market, I would say poly market. And it's interesting because, Hong Kong, in terms of betting, gaming, there's only one license provider, which is the Hong Kong Jockey Club. So the Hong Kong Jockey Club provide the betting and gaming service in Hong Kong for horse racing and football bets. And we had some discussions a few months back about basketball, betting in Hong Kong, but we are still in different views in the market. So I think the legislators are still thinking about whether we should open up more options in bettings and gamings in Hong Kong, whether the implications to the general publics here, to the youngsters here. So that's something that we have concerns on. And so with my own estimations, I think the prediction market or poly market will be difficult to establish in Hong Kong. I think definitely we're not ready. I personally think we are not ready for opening that up in Hong Kong yet. So I think we'll see how things goes in different countries.
Yes, I think there's just too many issues. One bad apple will spoil the entire ecosystem. I think there's a right approach. Stay fast, looking into issues, but we have to look at it and research. Eric, you have any comments on that?
Well, as Cyberport is an ecosystem builder, right? So we have a lot of innovators, in our community. And while, we do not, actively or directly participate in the market, but we want to become the market voice, and channel that voice to the regulators. And that's why we have been working so closely with the policymakers like the regulators. And we have actually done a lot of sandbox, with Hong Kong MASFCs and many others regulators. So I guess the idea is, all these various different innovations and maybe potential, new products that could come out, right? They get a early advice, from the regulator of the viability before they invest further into it, right? And back to my point is, at the end of the day, it's a business, and there's always this calculations between risk and return, and we want to make sure everybody is happy about the environment, and we have a good environment for them to prosper. Right?
Yeah, very good advice. So as a startup, you have to choose the path of the least resistance, so that because you have to worry about bottom line, you got to explain to your investors, and you have to work with everybody. What about Yuki-san? Do you have any comments on that? Yeah.
Back to your opinions. I understand what you say. Market making is very needed in emerging market because 30 years ago I was a hedge fund gatekeeper also in the U.S. So in emerging market it's very needed. But sometimes we are talking about it's needed, but sometimes it's against unfair trading. That's that's the point. That's why we are discussing with the FSA right now. And also, you're talking about the prediction market, right? Prediction market is considered as a illegal gambling in Japan. But only one exception. That is, if that product is under derivative of securities, its product is under, including derivative in securities market. Only that case in Japan, it's allowed it.
Yeah, that raised a very interesting point, because I'm also a chairman of an exchange, the Apex Futures Exchange and Clearing. So we are one of the 4 exchanges in Singapore that actually have a lot of members trading. I do notice, like even in the US, CFTC and so on, there's some discussion. The reason being that we have all the futures option that you need to have margin upfront and so on. But a prediction market is on the same instrument. You don't have to roll over. There's just an and. You don't have to have the margin trading. So there's a lot of advantage if you treat it as an options or futures for the financial market, not for betting like horses or any, just purely on or allowing insider trading. So those are the new things that are discussed in the US. And Canada is a very different, very interesting model that do away with all the bettings and so on. I think it's worthwhile for us to take a look at that. But we have about 3 minutes. I want each one of you 1 minute. As we gather here next year, what would you like to see how the market has developed? Duncan.
I think the interest, we're looking from the participants this year, even though, the market has ups and downs, and we see the interest is still here, very strong. I think the blockchain tokenized development of security products, of digital assets is just at the beginning. So I would suppose we want to see more innovations. We want to see more new points of interest next year that people will come into discuss. Every year we see innovations. So what I want to see is we want to have new innovations now collaborating with, let's say, AI and all other technologies. And we keep innovating on the digital assets. That's what I want to see.
Thank you. Eric.
From our community, I don't see a short of innovation, but what I want to see is to see more global capital, continue to coming, to build a sustainable and progressive, digital asset market here in Hong Kong, right? And we are here to welcome, all the Web3 players to Hong Kong.
Thank you, Eric. Yuki-san.
Yeah, I think also innovation is very important, and we JCBA supported startup companies to discuss what is the good conclusions and submit to the government and also politicians. So we are talking about it every time. On the other hand, regulation is very important also, because everybody is happy about the trading. So in JVCA, we are discussing about how to regulate that. It's a half and half. That's my opinion.
Yeah. Well, I think we come to the end of this roundtable. We were here last year. We are here again this year. We see so much progress has been done in Hong Kong. Last year, I was really surprised at how much Hong Kong has done. This year, there are already 12 licenses, 2 licenses for stablecoins, and talk about more regimes that is coming is extremely positive that I'm seeing, and it's all the good work of people like Duncan, Eric, and in Japan, Yuki-san. I hope next year when we all gather here again, we will see an even more accelerated development in this space. The things that we talk about today are much more in detail, and hopefully that all of you from the ecosystem will respond to the regulators as well as people in the legislation, in the Cyberport, and also in all the associations, including Global FinTech Institute. We are here to ensure this industry will take off, but we cannot do it alone. We hope that the industry will come forward with responsible innovation and help the entire ecosystem build. And finally, I would like to thank Wan Xiang, who has been organizing, and of course, Xiao Zong, have been organizing this Web3 conference back more than 10 years ago from Shanghai all the way to Hong Kong, from a very small industry to today, every regulators are talking about it. So once again, can you put your hands together to thank this esteemed panel? Thank you very much.
Thank you. Thank you, our panelists and moderator, for the brilliant discussion. Please remain on stage for a photo together. Will our panelists and moderator please come forward for a photo together to commemorate this very special moment. And when you're ready, let's squeeze in a bit and let's look towards the middle for a photo. Ready? 1, 2, 3. And another one.